Time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. We're back again with Brianne Gardner. She's our featured guest. She's also Senior Wealth Manager at Velocity Investment Partners, Raymond James, to talk about something, Brianne, that investors have been waiting for a while. It seems to be here now, and that's increasing breadth in the market. It's not just the magnificent 6 or 7 driving the markets higher.
Yeah, exactly. I think that is something, we've all been talking about and hoping to see, and now are starting to see it, which is great for investors and great for this bull market to continue to go higher. I think, it is an indicator that we use along with some other, more technical indicators like RSI, like MACD, like the advanced line, the percentage of stocks above and below their 50-day and 200-day, and the numbers of stocks hitting their highs versus lows. So to us, we did see, as you mentioned, kind of the Magnificent 7 starting to lead and that market narrow concentration. Then we saw kind of the Fabulous 4 now. And now we're starting to see a little bit more breadth increase from sectors like utilities and materials that maybe weren't doing as well as those other Magnificent 7. And we are starting to see those participate in this rally. So to us, that is showing us, are we seeing a rotation in the market? Are we seeing a broadening out of the market, which all would be more bullish, right, to see other stocks participating? Because when we see more stocks participating, that is showing us more bullish than bearish. So we have seen more stocks rebounding from the April lows or the April pullback that we just saw. We are a little bit cautious, though, especially because the amount of stocks that are above their 50-day is something else that we track. So in January, there was about 90% of stocks that were above their 50-day. Looking back to March, 80%, and now we have about 50%. Mm-hmm. So to some investors or some analysts, that might show, is the rally exhausted? But for us, that is, we're watching it closely. It is another indicator that we monitor, but it could just be, short-term volatility as we see this rotation continue to happen. So, fewer stocks are participating or were participating, but we want to see that number get a little bit higher.
One sector that gets a lot of attention, and it gets different types of attention, I think, in Canada versus the U.S., is the consumer discretionaries. We have a lot of people come on this program and say avoid the consumer discretionaries, at least in Canada, where the economy is slowing down. What do you think of that sector?
Yeah, so we did trim up our consumer discretionary, the kind of first quarter of the year. I think, too, a lot of people, when you start to see slower consumer spending, we just got GDP figures out as well, and 70% of GDP growth is based on the consumer spending. So if the consumer is slowing, that means that, they don't have as much disposable income in their pockets. So even if you're thinking of companies like, Amazon has been doing well, but Home Depot, Nike, Starbucks, et cetera, a lot of those companies, even out of the U.S., Dollarama, they can be impacted because, people don't have as much disposable income. So we like to tilt the portfolios to look at what sectors are doing well and what sectors aren't doing well and be able to make those active adjustments, because not every sector is equal. Still, having a diversified portfolio is very important. And as you're seeing right now, things can quickly change from leadership to what hasn't been leading in a very short amount of time.
Likewise, the communication services companies in Canada, the big 3 certainly are well off their highs. What do you think of that sector?
Yeah, I think we still continue to hold and like TELUS specifically for us. And, we're still collecting a great dividend yield from the company. Still has pulled back, obviously, significantly. You can see there from that January, February has been on a downtrend. But, looking at kind of that April, May, could this be a turnaround? And we continue to hold, some communication stocks because now we have anticipation of rate cuts coming sooner, right? There's a 50% chance that there's a rate cut tomorrow from Bank of Canada. There's now the September rate cut out of the Fed is back on the table. So when we start seeing interest rates come down, we will start seeing, utilities, communication, those stocks participate on that uptrend.
By the way, what do you think the Bank of Canada is going to do tomorrow?
I think they should cut. Will they cut is another question. I think, they are being a little bit tied to the U.S. And if the U.S. is pushing things down to September, Bank of Canada might hold on a little bit longer. But the longer that they continue to hold, the more cuts they will have to do. So, our expectations was at the beginning of the year, maybe like quarter basis point cuts throughout. But now it's shifted to the second half of the year where they might have to do bigger cuts to kind of play catch up on holding out as long as they have.
Okay, and why don't we finish with your thoughts on the Canadian banks? They've all just reported results.
Yeah, so I think we have been a little bit cautiously optimistic on the Canadian banks. We continue to own a lot of the U.S. ones a little bit more, BlackRock, JP Morgan. The only Canadian bank we hold currently is Royal. We did trim up and sold out of them kind of the end of last year. And just with a little bit of the loan loss provisions, the delinquency rates we've started to see, we felt that, they were going to be a little bit more under pressure. So we continue to hold Royal. We like Royal. We still have kind of, a little bit more upside in that stock, and we are collecting a dividend from it. I think they have done a good job at increasing their loan loss provisions. And as you can see, Royal has participated off those October, November lows and is up over 19% over the past year. So, I think that was a good play in staying with the quality banks because, again, not all of them are the same.